Hi, this is Christine Waldron, Chief Global Strategy Officer for U.S. Bank Global Fund Services. Today we are going to discuss a major transition that is taking place across the world to replace one of the most popular global benchmark interest rates, the London Interbank Offered Rate, or LIBOR. I'm pleased to be joined by Jumana Poonawalla, the Chief Program Officer for U.S. Bank's LIBOR Transition Office. Thanks for being here today, Jumana.
Thanks for inviting me to participate.
Jumana, we are hearing a lot from our clients about the LIBOR transition. Like U.S. Bank, this transition will be impactful for their organization as well. As most of U.S. Bank Global Fund Services clients already know, LIBOR has been the key reference rate in many financial contracts for decades. LIBOR has famously been referred to as the world's most important number. From small business loans to large syndicated loans to many consumer products like adjustable rate mortgages, LIBOR is referenced. Today, close to $200 trillion in financial contracts reference USD LIBOR. Jumana, why have regulators decided to discontinue LIBOR?
Christine, it's really important to remember how LIBOR is determined. LIBOR is calculated by a panel of banks that are surveyed for their unsecured borrowing costs in the interbank market. Since the financial crisis of 2008, one of the primary criticisms of LIBOR is that it is based on estimates, which has led to a lack of transparency and increased volatility.
We know that the U.S., the Federal Reserve Board, and the New York Federal Reserve Bank created the Alternative Reference Rates Committee, or ARRC, to transition us from a U.S. dollar LIBOR to an alternate reference rate. Jumana, can you talk a bit about the makeup of the ARRC?
Sure. The ARRC consists of banks, asset managers, insurers, industry trade organizations, and other market participants. It has around 10 working groups, each tasked with specific objectives to help enable a smooth transition from USD LIBOR. While the U.S. Bank is not a member of the ARRC, we do participate in several of the ARRC's working groups, including mortgages, regulatory, and legal and operations.
There's considerable interest in the industry about what will replace LIBOR. We are aware that the ARRC selected the Secured Overnight Financing Rate, or SOFR, as the rate that represents best practice for use in certain new USD derivatives and other financial contracts. Tell us more about SOFR.
SOFR is based on transactions in the overnight market. These are the repo markets where banks exchange cash collateralized by treasuries in the overnight interbank market. It's approaching on average $1 trillion of transactions every day, and the massive size of the underlying market makes SOFR a transaction-based rate better reflecting current costs for financing. The calculation methodology when using overnight SOFR is to average it over a term, so 1 month, 3 months, or 6 months. This is analogous to the current term lending with LIBOR and mutes the impact of day-to-day volatility. The Federal Reserve Bank of New York is already publishing daily averages of 30-day, 90-day, and 180-day SOFR, as well as, of course, overnight SOFR.
Jumana, I think our clients would be interested in hearing how U.S. Bank is approaching the LIBOR transition. It is obviously a considerable amount of work to move away from a benchmark that has been central to so many contracts over the years. How are we managing this change?
Our top priority is ensuring that we are doing everything we can to provide a smooth transition for our clients. That will be achieved through extensive preparation and coordination, which is what we have been focused on for over a year now. In 2019, U.S. Bank established an enterprise-wide LIBOR Transition Office to ensure preparedness for LIBOR going away. The LIBOR Transition Office is working in partnership with bank leaders from each business area, as well as cross-functional areas such as legal and systems internally within the bank, to make sure that necessary changes are made to transition away from LIBOR. As you can imagine, the work is required across extensively across the organization, involving changes to our operating systems, risk models, legacy contracts, just to name a few. And the overall success will require timely engagement of our clients and working collaboratively on decisions that impact them as well as US Bank. And therefore, we do plan to provide similar periodic updates on our transition efforts.
I'm confident that our rigorous approach to planning and executing will ensure a smooth transition for our clients. Thank you so much for joining us today, Jumana.
Thank you for having me.
Thanks everyone for tuning in, and we would encourage everyone to check out US Bank's LIBOR website. You can also learn more about the transition on the ARC's website, as well as the Financial Conduct Authority. Thanks for watching.